Hello and welcome to our 27th Trader Chat. I can't believe there have been 27 of them. That means we've been doing this for almost a year. The date today is the 23rd of May 2012, and as always we need to start by running through our 4 disclaimers. The first disclaimer reminds us that all trading involves risk. Please be aware of and accept this risk before trading, and never trade with money you cannot afford to lose. Second, you should know that past performance of any trading methodology is no guarantee of future results, and no representation is being made any account will achieve profits or losses similar to those discussed. Finally, all results should be considered to be hypothetical unless otherwise specified, and hypothetical performance results have many inherent limitations, and unlike an actual performance record, do not represent actual trading. A few pointers about using NetViewer for those of you who are new to Trader Chat. I see a few new names there, which is good. The best way to ask questions is to type a message into the chat window. If you cannot hear me, check the speaker slider in your VoIP tray of your NetViewer control panel, which is usually on the right-hand side of your screen. Although I know it is possible to move that to different sides of the screen. If you'd like to speak to me, and not that anybody has for a really long time, it's just lonely old me here in Italy, right-click and also enter a chat message, because speaking of mouse clicks, they pop up brightly colored arrows, which can be a little bit distracting if you aren't doing it on purpose. Okay, finally, just another reminder about our smaller breakaway chats, the first of which is our Oz Trader Chat, because we have a large group of users in Australia. Australia is very big on cycles and Hurst, and so we have a breakaway chat which is not only targeted at Australian users, but at people who are in the Australian time zone or in the Asian time zone, or for whom 11 a.m. UTC would suit better than 2 p.m. Of course, if you're a real Hurst addict, you're very welcome to come to both Trader Chats. We have quite a few people who come to both Trader Chats. It's always great to see you there. So by all means, come to both of our Trader Chats. Now, if I can find my screen. There we go. Right. So there's a lot to speak about today in terms of what's happening in the markets. As always in Trader Chat, certainly the way we've been running Trader Chat for the last few months, I'm just going to be speaking about the markets. I'm going to be speaking about Hurst cyclic theory, using Hurst's principles to analyze the markets, using Sentient Trader. If you have any questions, please don't hesitate to put a question into the chat window. If you have any opinions of your own, I'd be delighted for you to share them, and we can chat about them and discuss them in Trader Chat. If you have any questions, no matter how simple or how advanced, put them into the chat window. We are particularly orientating our Trader Chats towards people who are beginning with Sentient Trader and getting started. So if you have particularly advanced questions or so on, we might need to deal with those sort of after Trader Chat, so that for those of you who are just getting started, you're not overwhelmed by anything terribly complicated. But as you know, I'm always delighted to talk about anything to do with Hurst cyclic principles or analyzing the markets, no matter how complex. So I thought I'd just sort of start the ball rolling, really, by speaking about what might be happening in the markets at the moment, and I thought I'd take a look at the South African market, which, as a South African, is something that I often do, because there's a great degree of commonality. Of course, one of Hurst's cyclic principles, the principle of commonality. There's a great degree of commonality between markets in different areas of the world. South Africa is an emerging market, because us South Africans are just getting into the swing of things, and so it's an emerging market, and emerging markets move differently, often with a great deal more volatility, although certainly with what's happening in the markets at the moment, South Africa seems to be moving with lesser volatility. Anyway, so I thought I'd talk about that. And the comments about the NASDAQ. We've had many emails about the NASDAQ after mentioning the NASDAQ following the ill-fated, dare I mention it, the Facebook IPO on Friday, and some comments around the NASDAQ. So I thought, just to get us started, well, not to get us started, that's what I'm planning to talk about in today's Trader Chat is I'm going to take a look, of course, at the S&P 500, because we always do, and I'm going to take a look at the South African market and at the NASDAQ, look at what might be happening, and discuss what I think is happening, and I'd love to hear what you think is happening, of course. So let's, and if you have any questions at any time, please put them into the chat window, and or any comments, let me know. Right, first of all, here is the analysis of the S&P 500. Oh, the other thing I wanted to quickly mention was the euro-US dollar, but I'll get to that later. Okay, here's the analysis of the S&P 500. That is this the S&P 500? What workspace am I on here? Yes, this is the S&P 500, and this is the analysis that recently, as of about 2 weeks ago, in fact, during Trader Chat 2 weeks ago, when John suggested that in fact the 20-week trough should be moved back to the 30th of January, as you can see. This is a median line chart that I'm plotting, and the reason that I'm plotting a median line chart is it's very important to remember that when price crosses an FLD or a VTL, it is median price that we're talking about, and sometimes you need to, I find I need to remind myself of that, because when I look at the nice brightly colored candlestick charts, I can see price plunging through the FLD or the VTL, but when you look at the median chart, it's obvious. It's not so obvious. So the reason I'm looking at a median price chart here is that price crossed the 40-week FLD last week on Friday. In fact, Friday was a very dramatic day in the markets. There were not only various teenagers ringing bells. No, they're not teenagers anymore. That's I'm not allowed to say that. There were some people opening the Nasdaq markets, and they and the markets pretty much sort of collapsed around the world, which is all quite dramatic. And on Friday, the market crossed down below the 40-week FLD. So let's just zoom in and take a look at that cross below the FLD. The first thing you'll notice straight away is that, of course, price has jumped back up again on Monday. Monday, and is that Monday and Tuesday? What's that date there? That's Tuesday. There we go. And let's just have a look at it. That's the median. That's the median line. There we go. Okay. So so something fairly interesting, of course, has happened, which is that Monday the markets all suddenly bounced up again with tremendous force, and everybody got tremendously excited and said, you know, the markets have turned around, and that is probably premature. I don't believe the markets have turned around. When markets fall very quickly, and in bearish markets generally, rallies can be very sharp, and they can happen so sort of quickly and with such a strong surge that that it seems as though the markets turn around and then they just collapse upon themselves again. And what happened in yesterday's trading, as you can see from this bar over here, if I turn off that FLD, as you can see from yesterday's trading. Let me just try and turn on this whiteboard. There we go. Yesterday's trading. Monday the markets, of course, rocketed up. Yesterday the markets pretty much went nowhere. They went up a little bit, down a little bit, and they ended up completely flat. So when you plot a median line instead of the candlesticks, then of course the shape looks a little bit different, because the median price on Monday was not really that impressive. As you can see, the median price on Monday was just a small little bounce up, and the median price yesterday was a lot more impressive. So it looks as if though the market moved dramatically yesterday. Of course, it didn't, as I just pointed out with the candlesticks. The market moved on Monday, and yesterday went nowhere. So sometimes median line charts can be quite interesting to look at, because median lines represent the median price of the day, and give you a different sort of a picture to what's really happening in the market to the candlesticks. That's a bit of an aside. The reason why I'm looking at the median line chart, and I'm going to try and stick to the topic today. The reason I'm looking at the median line chart is because of the fact that price dropped through that 40-week FLD. Now, there's something that I must immediately point out about FLDs, and VTLs, that many indicators that one plots on one's chart, such as a stochastic or a moving average as a simple, or an RSI, a relative strength index, or any one of those sorts of indicators that one generally plots on charts. Those indicators are based upon a purely mathematical calculation that's been performed upon the data, and therefore as time moves forward those indicators don't move. The one thing you must understand about Hurst's cyclic tools is that the cyclic tools, both the VTL and the FLD, are based on the analysis that's been performed on the data. So the position of that FLD is based upon the analysis that's been performed. Okay? It's very important that you understand that. And in terms of the FLD, why is that the case? Because the FLD is very simply price displaced forward. And if we go back, the FLD is a very, very simple indicator. It's very simply the median price line displaced forward by half the wavelength of the cycle that the FLD is based upon. Okay, so here you can see this pattern in price. You see this orange line here. That pattern in price has been displaced forward over here and is repeated exactly in the FLD. Okay, that's all it is. It's taken the median price and it's displaced it forward by half the wavelength. So how or why might an FLD move? It's important to remember that the FLD is of course displaced by half the wavelength. If the wavelength of that cycle changes, then the FLD line will change on your chart. Okay, it's a very important point to bear in mind. Why might the FLD move? It might change if the wavelength of the cycle changes. Why might the wavelength of the cycle change? Because the wavelength of the cycle is calculated as a result of the analysis you've performed. Right? The phasing analysis. So here is the phasing analysis on this particular chart, and now Sentient Trader has calculated very simply the average wavelength of the 40-week cycle. I'm plotting the 40-week cycle FLD. So it's calculated the average wavelength of the 40-week cycle, and that is calculated on the basis of the positioning of the troughs. Okay, so here was the most recent 40-week cycle on the 4th of October 2011. Then the previous one was in March of 2011, and the one before that was in July of 2010. Now those are all fairly obviously prominent troughs, and so I'm fairly confident about this analysis at the 40-week level. Okay, when you get your shorter cycles, they